Hi, good afternoon, everyone. Welcome back to the channel. So in this one, we are going to do our final review of YieldMax's YMAX and YMAG of the year 2024. So on the spreadsheet, we've got about 2 weeks to cover, um, but the dividends over the last couple of weeks were, let's go over here, actually. Let me just start sharing the spreadsheet. So I got the spreadsheet fixed, so we won't have the disaster that we had in the last video I did on this subject. I've got a couple other videos I'm going to get into as well if I can kind of ramp up here. I'm trying to get back into my rhythm. I feel like the channel's been off rhythm since we had Hurricane Milton here. It's been like over 2 months, so it's time to get back. All right, so you see the spreadsheet is fixed. We don't have that uh, gaudy table anymore. This is just a simple, working sheet. So I believe we have about 2 weeks of dividends here. So let me go ahead here. So hope everybody's doing well today, and had some interesting stuff shared in Discord today. I hope you all enjoyed the trading video I did, by the way. Those videos typically, even though I feel like those provide the most value, those typically don't do the best. All right, so we can fill out what we know. We had 5 trading days, then 4 this week. We'll count it as 4, even though it's really 3.5. 5 and 4. Let's go over here, and then let's go over here. Center this one. Okay, so what we are going to have to do is let's go to the YieldMax X page here and find out the X dividends. I don't have it memorized. Okay, so let's share this one over here. Oh, let me announce the Discord first that I'm live. '24. There we go. Trying to build back up here. Let's see here. All right. Okay, so let's share this for starters. Gonna go over here. Okay, so of course, as we know, YMAX and YMAG are weekly. So we had 17 cents and 24 cents respectively this week. So that was for YMAX 24.48. So 0.2448. So that actually exceeded our prediction. So 0.2448. Luckily, the spreadsheet kept all my decimal points here. We're going to do 2 weeks at a time here, folks. YMAG, where's my screen share? YMAG was 0.1742. So 0.1742. Now I got to find last week, 0.1742. Let me do this. Let me just keep the share on the spreadsheet. Okay, there we go, so that you all can see. And for those of you that are new, just so you all understand what we do here, I'm taking YMAX and YMAG, and what I do, I take the weekly dividend, I take the number of trading days, I take the monthly, I make it monthly, I annualize it, I take the current share price to track for NAV erosion. I take the percent yield, I take the price change with dollar amount invested, hypothetically $100,000, because this makes it look really appealing. And then so I take what would be the weekly dividend income we would get, and then I annualize it. And then towards the end, I take a hypothetical portfolio of 200,000 split evenly among these two, and I calculate how much we would be averaging. See, like last week, it was 77,852. So that's like a full-time income if you had $200,000 to invest in these two funds. And we're also seeing no NAV erosion. So I'm going to keep the focus on that tab while I go and hunt for last week's dividends. Let's see here. And there's a couple other topics I want to get out before the end of the year as well. Okay, so this is YieldMax. This is from, let's see, December 20. We want to go back a week. December 19th. That doesn't quite show us what we're looking for there. Bear with me, folks, unless somebody wants to put it in the comments here. I know I covered it already, but I didn't update the spreadsheet. So let's see. Is this it? December 18th. Okay, that's right. YMAG, because one of you told me, or a couple of you actually told me that because it was an off week, there's like one of the weeks YMAG is always way lower. So YMAG was 0.592 the week before. Hey, look who's on, Keith Allen. And if I'm not mistaken, to date, actually, you and maybe one other person are my only two channel members. So definitely get those channel memberships in. I'm going to start in 2025. I'm really going to start ramping up and adding value to channel memberships. Okay, so welcome, Keith. Been a while. Okay, so what we have here for YMAG, it was, let me go back here again. This is the spreadsheet. It was 0.592. So for YMAG 0.0592. I'm going to make this red because this is low. So whoever pointed this out to my very astute follower, you'll notice this is happening now. You see a pattern, with the exception of the first 5 weeks. It started in week 6, actually. So 1, 2, 3, 4, 5, 6. In week 6, we got a 5-cent dividend. And then in week 10, we got a 5-cent dividend again. Now in week 14, we're getting a 5-cent dividend again. So I put this in red because this is definitely the outlier, but you guys notice a pattern. So, okay, now we just need the YMAX dividend from a week ago, which was 0.139, so 13.9 cents. So 0.139, let's see here, 0.1390, which is to be implied, right? Okay, let's go over here. All right, so let's do week 1 first. See if I can get the whole screen here. All right, let's go here. So this is 60 cents. This would be 723 annualized. Now we need to go and find the stock price. Let me check something here real quick. Now we need to go find the stock price. Um, okay, so the stock price for YMAX, and this would be as of the 24th. Wait, no, as of what day was this? The 18th? 1750. So we did fall. So I'm going to say 1750. And then while we're at it, let's go ahead and do it as of, what was it, the 27th? It was, wait. No, I'm going to try to take Christmas Eve if I can. See, we had that stupid, actually, you know what? Wait a second. See, because of Papa Powell, our chump Fed chairman, it fell like $1 something. But you know what? I'm going to actually go with this. Forget that. I'm going to go with before that happened because these were announced that morning. We'll just go, you know what? We'll just go with 1818. That's what it was early that morning. Okay, and then now, as of the 24th, we were at 1795. So we did recover. So it doesn't look quite as severe. Percent yield, this is what we got here, 39.76%. This week we got 0% the following week. What's up with that? Let's do this one. This is why. So the 24 cents we got last week would be $1.06 monthly. Annually, it would be 12.73. That's a big comeback. So the stock price, or it's not a stock, it's an ETF, but the share price fell 22 cents this week, and then it fell another 23 cents the following week. Now, off of a hypothetical $100,000 investment, this is what we would be looking at as far as number of shares. So because of the fact that these are cheaper and these are performing better, I would think right now that YMAX and YMAG are a better investment at this point. I only have one of them. I don't have both. But you know what? If you look at it, we might actually be at a good buying point because if you look at what are we at now? 15 weeks, 14 weeks? We're at 15 weeks now. So in the 15-week cycle, we are close to the low price. The lowest price we had was 16.94. We're $1 higher than that. So we're not as high as we were, but we're at a better buying point than we have been in a couple of weeks, or actually maybe a month. Okay, so last two dividends. So for the second to last week, we were at 764.58. We almost doubled. We were at 1363.79 as of this week. So annually, this would be 39,757.98. And then for the last week, annualized would be 70,916.99. This number, my formulas kind of got screwed up when this became a table. So I need to take cells B16 and then divide by F2. That's the original share price. So let me see what I'm trying to do here. So the dividends divided by the share price, this should actually be a percentage. This shouldn't be dollars. Okay, now my brain's clicking. So now this one, I want to take this, divide by 15. We'll divide by, let me do percentage first. Let's divide by 14 first because we want to see what it was last week since we didn't actually cover that. So it was 1.24. It dropped to 1.16. So what this is saying, folks, is that in the 15 weeks this has been trading this way where we're getting a weekly dividend, this is saying that we are getting a 1.16% return on this weekly, which is phenomenal. It's unheard of. Think about money markets compared to that where you're getting 4 or 5% annually. This is 1.16% weekly. That's on pace. I don't think it can sustain, by the way. Just a word of caution, but that's on pace for like 52% a year. As far as this one, so this share price, this is the original share price minus the current one. Let's do it for this one first, since we didn't do it. So this should actually be a percentage. So it was 3.3% higher. Now let's do it for the current week that we're on. It's 1.99% because we lost like a dollar or so. So that's 1.99%. The average dividend yield is 60.17%. So nothing can go wrong with this, right? Okay, so this should be a percent instead of a dollar. I got thrown off a couple of weeks here because this made it a table. Now I'm clicking again. So this is taking this plus this. I guess I'm going to have two numbers here. So this is the actual total return. So let's do it for week 14, 1.38%, week 15. So it's actually 1.29%, folks. So forget this number. We don't need this number here. We need to focus on this number over here. This is your actual weekly return. I'm going to put weekly return exclamation point because that is phenomenal. That is a beautiful number. If we multiply this by 52 weeks in the year, like there's just no way. I mean, there's no way this can sustain, right? If I annualize it. See, when my brain gets clicking, I click as far as spreadsheets here. Okay, let me check something here. Circle back on comments here. Oh, look who's on. Dahafalump believes that Papa Powell does need to be fired. I actually think so too. But to confirm what I'm thinking, let me consult the advanced financial forecasting equipment and let's see, should Papa Powell, otherwise known as our chump Fed chairman, should he be fired? So the equipment does seem to be calibrated properly today, and it says it is decidedly so. So even the magical equipment agrees. Cool, huh? Yeah, him taking the market like that. Like I said, he looks political. Now unfortunately, he's not much of a poker player. He showed his hand because like I say, before the election, he said he didn't say, but he cut the interest rates by 50 basis points, which is a 0.5%. And then 2 weeks later, he says, "Oh, actually, the economy doesn't need that aggressive of rate cutting." So you can't shift your stance like that within 2 weeks without appearing political. Anyway, let's press forward. All right, so there's that one. Now let's go to YMAG. So YMAG, we pretty much have the information we need here. So week one, it would be 26 cents monthly and then 75 cents monthly. We're catching up on 2 weeks in a row here. Annualized will only be 308 and then up to 906 here. Now let's look at the share price for YMAG. Share price for YMAG would be, it didn't fall too much. So we're going to take December 18th before that idiot started speaking. It was 2036. It's a bummer that he couldn't just go along and talk the markets up because we could have really had an even better rally for the year this year, even though we've done phenomenally. Okay, so that was 15.12%. Price change was 14 cents. Let's go ahead and knock this out. On $100,000, we would have 4,911 shares. Weekly dividend would be 290, so that was a big, big drop. This is why I take the average. Okay, and then annually would have been down to 15,199. And then here we had 4 trading days here. I just need to pick the share price here that we're going to go with. As of December 24th, it was 2012. I saw that number a couple times, so I'll go with that one. 2012. So this dividend yield this week was at 45.02%. This dropped by 24 cents. Let's go ahead and knock the rest of this out, folks. $100,000, 4,970 shares. We were back in saddle again here. We were at 866 if we round up. And then annualized, we were at $45,021.87. Now let's convert these numbers back to percentages like they should be. This one should be, we're 3 weeks behind here. Let's do this with week 13. That's 12.38%. Week 14, 12.69%. So you see how this is changing. And then week 15, we're actually going up, which we should go up, right? It's nice for investments to go up over time. So look at that. We increased folks by a whole 2%. And we have what we call NAV appreciation, which is a rarity, especially with yield max funds. And then so we have the average here. We need to include, let's see how this changed. G31, G32. That was week 14, and then week 15, 46.62%. This one, the original share price was 1917. Let's take it now. Let's do F20. Wait a second. Oops. No. We want F19, and rather we want F32. This needs to be a percentage. So that was a big drop. Actually, whoops. Hold on. Let me make this a percentage first. So it was 5.48%. Then it was, if we skip ahead, oh, come on, 5.48%. Let's take F32. 6.21%, F33, 4.96%. Now F34, there is no F34 yet because that'll be next week. We're trying to predict the future, which only the advanced equipment can do. Okay, so it's 4.96%, $100,000. Ooh, mistake. This is why. Oops, because we're trying to skip ahead again. Oops. Okay, so our verdict is in. We're just fixing our calculations here. Now this one, we still have, so we have a 5%. So in both of these, okay, we have a positive NAV, which is unheard of, rare, especially with yield max funds. We have a positive 2% NAV appreciation, and we have a 5% NAV appreciation here. So this one, folks, we need to make this back into a percentage. This one, we're just adding the two percentages together. So we're up 13.6% in the cumulative realized dividend yield. Now the difference between this number and this number, this 47%, this is making it annualized. This is the actual dividend that we've realized so far. This is our realized return for the year. I could annualize this number too, but we won't do that. Too many numbers, right? So it's 18.55% total return in this fund. I should do these spreadsheets for all the funds, shouldn't I? And then 19.34% return in this one. I might actually go back if I get some free time and get a hair up my ass. I might actually go back and do all of these funds, especially Tesla, because that's the one that I have the most shares of. And a lot of us OGs have the most of that one. Okay, now for this number, folks, we want to do L32. We're going to look at L15 plus L32 for last week. So last week we were down to 54,877.82 in terms of annualized dividend income and a portfolio equally split among these two funds, 50-50. Now we're going to do L16 plus L33. So look at that, folks. We are back to $116,000. And that's up significantly, by the way. So this means if you were to put $200,000 in these funds and hold these funds for a year, your projected annual dividend income in these two funds would be 115,938.86. Percentage-wise return, that is a 57.97% annual return, which is not too shabby at all. Weekly return for that one. Let me do this here. Let's do a simple, or should I say an advanced spreadsheet formula called taking the weekly number, copying and pasting rather, annualizing this times 52. That is a 74% return, folks. Look at that. Bold that one. So that's where we are. I'm going to make this one a little bit bigger, nice and big for the old folks to see at home. Oops, I mean anybody with a smaller screen. I don't want to make the whole thing big. I want to make the font big. Stupid spreadsheet. Okay, now there we go. We got a big number, because big return means big font, right? Okay, so $116,000. That's where we are for the end of the year. Now, since this is the last video we're going to do in the year 2024, which is really a profound thought, actually, thinking about like I won't actually be covering this until next year. Next year, like that sounds like a while away, but that's actually only like 2 or 3 days away at this point. 3 days, actually. So we got a hey, and then we got a dang young gun. Okay. Now what we're going to do, since this is our last video of the year 2024 for this particular group of 2 funds, I'm going to go over to Seeking Alpha and I'm going to do my usual comparison. Now it's kind of hard to compare this to an underlying, so we'll actually compare it to Rec Shares FEPI, which I haven't done a video on FEPI in a while. Okay, so let's X these out. Let's add YMAG. Let's add YMAX. And then let's do FEPI. Let's compare these 3. X this one out. Okay, so how have we done year to date? So these have been around. The first one to go public was actually December 2023. December 23. And then the next one went public January 18th. That was FEPI. And then the next one went public January 30th. So to get an apples to apples comparison, actually, since inception, we'll do this first. YMAG's total return is 39.37%. YMAX's total return is 28.87%, which is phenomenal. So they're both beating FEPI at this point. They're kicking FEPI's ass, 17.82%. So no more FEPI. That was the number 1 performer up until the last couple months. So let's go to January 30th. And then let's go here and do today as of the most recent. Okay, so YMAG is in the lead. Now let's do this. Let's just do price comparison. Let's take away total return. Let's do price return. Price return is, how about that? None of them are positive in terms of price return, but YMAG almost is. Now I want to point this out. Since these have gone weekly, they're doing a lot better. These have been weekly for less than 6 months. If I look at that, oh, now we got to never, oh, AIPI. I can. Glad I looked. See if you'll super chat me. I notice faster. Okay, let's do this here. AIPI. That is another good one to add. AIPI. All right, let's look at that one. Okay, so AIPI is not doing too bad either. 1.56%. This is in terms of price return. Let's go back to total return performance. Total return. Here we go. Okay. AIPI is in comparison to FEPI. So there's our 4. So folks, that is going to do it for us for the coverage of YMAX and YMAG for the year 2024. Thank you all so much for tuning into all of these videos on the subject throughout the year. We're going to have many, many more next year, and we will continue to seek new heights in terms of investing, in terms of growth of the community, and everything else. So thank you all for tuning in. Like, comment, and subscribe, and join Discord. That doesn't have to be in that order. Just make sure you do all 3, and we will see you all on the next one. Take care. Bye.